Welcome to the Maine Real Estate Roundtable podcast. I'm Bobbie Grenier, your trusted guide to navigating the world of real estate in Maine. Get ready to debunk mortgage myths, unravel real estate mysteries, and learn tips to avoid costly mistakes. Whether you're an industry pro, an overwhelmed buyer, confused seller, or simply curious about life in Maine, this is the podcast for you. Hello, my friends. Welcome to the Maine Real Estate Roundtable podcast. I'm your host, Bobbie, and this is the podcast where we talk about all things Maine real estate. I want to give a huge shout out, as always, sending lots of love, hugs, good juju to my OG listener. And if this is your first time listening to the podcast, welcome. Thank you so much for hitting play and giving us a try. I am really excited to share today's episode with you because it features an awesome chat I had with Mark Lloyd of Total Mortgage. He is so knowledgeable and well-versed in the Maine State Housing Authority program. So I asked him to come on to the podcast, give us some insight, talk to us about the Maine State Housing Program, and more importantly, to debunk some of the myths around that Maine State Housing Program. So I hope that you find this really informational. I'm going to warn you, there's a lot of information shared by Mark. Like I said, he's a wealth of knowledge on the Maine State Housing Authority program. So be patient, re-listen if you need to, and wait till the end of the episode because Mark gives his contact information. So everything that he talks about today, he can sit down with you, explain, apply it to your specific situation. So grab that comfy spot, pour that cup of coffee, and let's jump in. Good morning, Mark. Welcome.
Hello.
Thank you so much for coming on. I appreciate you coming in, sharing your expertise, and we want to learn a little more about you. So for our listener, can you sort of give us, you have an interesting work path. So can you give us a breakdown of how you went from police officer to loan officer?
Yeah, I mean, I've got my degree in history, which then didn't transfer into law enforcement. I did that for 18 years and had to medically retire from hitting a deer, which sounds silly. And then from there, got into lending.
So do you find that there's anything that really helps you when you translate from your life, your world as a police officer or a law enforcement officer into the lending world?
It's really just the simple stuff, like returning phone calls. Because that was very, very important, with the sheriff's department. Just being professional, returning calls, being on time, all the simple stuff that I think unfortunately sometimes in this world, we kind of one of my friends is a realtor. We just call it his time. I said it's supposed to show up at a certain time. They're always like late or something, and so it's just trying to just do the little stuff is really helps carry over that it's simple, but sometimes we get so busy we forget the simple stuff.
I think that that's a great point because times have changed and most mortgage loan officers aren't sitting in a bank, from 9 to 5, that realtors are out working all hours, weekends, nights, and that you have to be available to them. So probably those crazy hours you expected maybe a little bit different when you went to the lending world from being a law enforcement officer, but you still have the crazy hours.
Yeah, I mean, at least I don't have to, get woken up at 2 in the morning to drive to Chester for domestic or something like that. But it still is the late hours of people calling, text messaging. I mean, I've had clients that are texting me at 11 o'clock at night. Because also sometimes on the West Coast, they don't even realize, oh crap, it's not 8 o'clock there.
Well, the topic I really wanted to pick your brain about today was the Maine State Housing Authority program. And I think that it's sort of going to have its moment, or it's getting into having its moment again. It maybe wasn't quite as popular when rates were so low. So there were a lot of competing programs, but now that interest rates are a little bit higher, do you find that Maine State Housing is sort of showing up on the scene again now?
Yeah, I mean, it's a tremendous program. Because a few years ago, our rates were actually lower than what Main State Housing is. And now with Maine State Housing, because they just lowered their rates back in October, and now it's a 5,375, 4,875 for veterans, and a 4,375 for their first gen program. So I mean, they're now a good 2 to 3 points lower than what you'd get with a traditional mortgage.
So, for anyone that's never heard of the Maine State Housing Authority program, can you give us a really basic overview of what the program is?
Yeah, so they have they have a couple different types of it. They have their Advantage, which is just the basic. You get your $5,000 grant money. There's income limit with the program. That's what's the one thing that sets aside some of the other stuff. Um, so you have the Advantage, you have your multi-unit Advantage, and you have your VA. Those are kind of like your big three. So the income limits in here, anyways, are 97.9 for a family of 1 to 2. Then it goes up over three, it goes up to 111,835. So you have to be under those income limits. You need at least a 640 credit score. Those are like the basics. And then we pair it with all the other loan programs, your USDA, VA, FHA, and then you can do conventional in the 6 cities that you can't do USDA. So like Bangor is one that you can do a conventional. Um, but really the like so the biggest advantage is the amount of money you can save. Because like say a veteran, they're gonna get a 4,837.5 rate, which they probably couldn't even buy that with points. So they're gonna save on that, and then so you're not paying points, you're getting another $5,000. It just makes it really, really extremely competitive.
With this economy, people are having a hard time paying their bills, period, much less putting aside money for a down payment. So, can you talk to us a little bit about what a down payment might look like with one of the Maine State Housing Authority loans?
Yeah, so I mean, so they like as I said, they get paired with the other programs. So if you're doing an FHA, it's 3.5% down. If you're doing a VA or USDA, it's no money down. So the Main State Housing does require you to have 1% into the transaction of your own money. However, that can actually be gift money.
I hear a lot of, misconceptions, and you probably do too, about the Maine State Housing Program. What would you say, like, the biggest misconception is that people come to you with?
Well, yeah, one of the biggest things is it's the recapture tax, which hasn't been enforced in forever. And then the other thing that it's not so much Main State Housing, but so Main State Housing also does do single wides. However, they have to be 20 years or newer. So because of that, a lot of the public and even some realtors think that a single wide can't be financed if it's over 20 years old. And that's not true. It's just that's what Main State Housing is. And so people are so used to that they just think it's a 20-year term for all mobile homes, which isn't the case.
And then the other thing is, do you have to be a first-time home buyer, never owned a home before?
No. So the definition, what they use is you haven't owned a house within the past 3 years. However, there's many loopholes to that as well. Um, if you're a veteran, you can own a home currently. We can even have, it's not uncommon that we have someone own a house and then they're selling it and they're buying it all in the same day. We can even do that as long as the sale of their house closes at 9. They purchase the new house at 11, and we can do that with VA. Uh, the other loopholes are if, say, you were gifted land, or God forbid, a family member died and left you a camp. You can have raw land or a second home or even an investment property as long as that's not your primary residence. So long as we can document that you rent somewhere or whatever, you can actually have a second home.
What about a scenario where a husband and wife want to buy a property? One of them has owned a home. Is there any way around that, or are they simply just not eligible to do it together through Maine State Housing?
Yeah, so normally with the main housing, it's if they're on it, they can't have owned the house. Um, However, there is a another loophole on that. Say it's a husband and wife, they get divorced. Say they're divorced 5 years ago, and one of the spouses move out. They're supposed to refinance, but they can't just because credit wise. Even though you have a spouse that's on it, they can go through and they can actually still qualify because they haven't lived at that house for more than for 3 years.
I should have asked you this before, but going back to the recapture tax thing, yeah. Well, we kind of jumped into recapture tax, but for somebody that doesn't really even understand what a recapture tax is, can you give just like a brief explanation?
Because Maine State housing mortgages are financed with mortgage revenue bonds, they are subject to a federal recapture tax. This means if you sell the house within 9 years of purchase and you make a profit and your income has increased substantially, the federal government may claim in taxes a portion of the money you have saved with a Maine housing mortgage.
You had mentioned earlier the Next Gen program. I find that interesting. I actually was at a G-Bar meeting and they had somebody from Maine State Housing that talked briefly about what that Next Gen program is. It Next Gen or First Gen?
First gen.
Next Gen is a education loan. That's right. But First Gen, I think that's a really interesting concept. Can you go into that just a little bit?
Yeah, so one of there's a couple advantages to the first gen. One, instead of 5 grand, you get 10 grand. However, you have to so in addition to your required first time homebuyer class, you also have to take a financial literacy class. That's what gives you the extra 5 grand. And then on top of that, instead of they're advertised, which is currently 5,375, you get a whole point off. Now it's a 4,375. However, you have to be a first generation homebuyer, meaning that your parents never owned a house.
How do you prove that?
It's so they're gonna fill out a form stating that. Now there are stuff that like fraud guards and stuff when we run stuff will can pull up. But again, if you're somebody that's 60 years old, it's going to be very difficult to say they came from state of Washington. In 1960, did your parents own a house? It's gonna really be difficult, but it's on the client. They're gonna sign a form stating this.
Do you find are you doing a lot of those?
I've done some, so it just kind of depends on if they qualify. But usually it'll go through and be like, oh well, my mom owns a trailer. Like, okay, well that also gives leeway, because if you own a trailer on private land and it's permanently attached, then yes, you're a homeowner. If you own a trailer in a trailer park, where you're paying lot rent and the wheels and axles are still there, it's just it's on gravel, it's not permanently attached, then no, you're not technically a homeowner. So one, you could qualify for the program, and also if that's what your parents owned, then you still could qualify.
What other qualifications are there for the first gen besides having a parent that had never owned real estate or owned a home?
Basically, I mean, what's the only additional is that they're a first generation home buyer. They still have the same requirements, the minimum credit score, the DTIs have to be in line. But that's really the big difference. It's just the first generation, and in addition to that, you have to take the financial literacy class.
Do you do you find is there limited funds for like the first gen program and some of the other add-on programs to Maine State Housing?
No, we haven't run into that at all. Basically, they're just, we've had no issues with that. Sometimes, like USDA or something, we've had stuff like that at the end of the year. Sometimes it gets tricky. But again, that hasn't happened in a long time.
So the education piece, that is a requirement for Maine State Housing. Can you talk to us a little bit about what's involved in that
Yeah,
class?
so there's a couple different ways you can do that. One, you can do it, say like Penquist Cap, where you go on their website for Maine State Housing, and it's going to give you a breakdown of where you can locally take your classes, and then it's also going to give you a breakdown of the of where you can do your online stuff as well. So a lot of times, the financial literacy class, if you can hit that online, sometimes a little bit easier, because that's a longer program. So usually, you start talking to somebody if they're thinking they're going to do that. Usually jump on them to start the class to get going, because there's sometimes there's limited availability. So you just want to kind of jump in on that.
I think a home buyer literacy class is a good idea, really, for anybody, especially young people that I don't feel like they're getting the education and the resources, on the in the school level or even maybe at home to understand all of that.
Yeah, I mean, it'd be much better for them to get their education through something like that versus sometimes a parent or an uncle or a friend, because guidelines change monthly. Just because you bought a house 10 or 15 years ago, that same rules don't apply. There was times where student loans could be excluded, which isn't the case. And now, and again, the student loans they're always changing on how they're calculated. So it's just a lot of misinformation.
Do you do you find that a lot of people come to you and maybe you're like, I know I'm not going to qualify for Maine state housing because of all of the misconceptions out there?
Yeah, I mean, so one of the advantages now that we can also do like soft credit pulls. So a lot of times people wouldn't want to, have the credit pull because they didn't want the hard inquiry. Um, and then so I'll talk to them. Then all of a sudden, 6 months later, they'll call up, "Hey, I just saw this house I want. I want to get pre-approved. Fill out an application," and I pull their credit and say they're 590. And it might be a situation where within that 6 months we could have fixed it. Be it being added on as say like an authorized user. I mean, that's one of the little tricks to help boost credit is if I always like saying, your mom has a J.C. Penney card she's had since 1995. She doesn't use it. She calls the card holder, adds you on, and now you've got that trade line. So now because a lot of times, especially younger people, when they're starting out, sometimes it's not that they have bad credit, it's that they don't have really any credit. So with an authorized user, you bypass the negative. So like when you apply for a credit card, you take the hit for a new inquiry and you take the hit for a new trade line. And then after time, then it builds up. With the authorized user, you can jump on that, and then that'll help you. But you eliminate the negatives. Now, obviously, you want it to be like 5 years old or more. No derogatory history and little to no balance. Because obviously, if there's a high balance, that's going to affect it. So sometimes it wouldn't help you out. So there's definitely advantages of doing stuff like that. With that, mainstay housing, they're going to want you to have, you know, trade lines, reporting in your own name for 12 months. So you couldn't just have an authorized user. So you want to at least have something in your name as well.
Taking a step back, can you just explain what a soft credit pull is as opposed to a hard credit pull?
Yeah, yeah. So the hard pull is basically we pull it. It's gonna show up on credit reports. It's also unfortunately gonna trigger what they call trigger leads. So if you go to buy a car or say you get a mortgage pull, you're gonna literally sometimes within minutes get a phone call from a mortgage company that and sometimes they're even dubious where they'll say your lender wasn't able to do this but we can, or they referred you to us, and they'll even go as far as saying we have your application but it's incomplete, and they'll send them a new link. I've actually had clients tell me this has happened to them. So that's what happens with your hard pull. So you're going to possibly have trigger leads. Also, it's going to, if you have too many credit pulls, it negatively affects your credit. A soft pull is going to give us all the information, but it is not going to impact their credit or cause any trigger leads to happen.
I do want to talk a little bit about credit. And you started talking about this. I'm not always, but I'm assuming with a program like Maine State Housing, it's many times a younger person that is buying their first home. And I think that a lot of people come to you, I'm sure, and say, I don't have any credit cards. Like I'm in good shape. I have no credit cards. I have no car loans. I have no debt. And then it's like, great, but how do you have that conversation with them?
Yeah, I mean, it's like it's on one hand, it's awesome. Your DTI is going to be great because you don't have any debt. However, you have no credit because everything is risk based, and so it really limits what we can do. Now we can go through and do, there are like non-traditional programs where you can go through. We have like three trade lines, but it's really difficult because they have to have. Ideally, they want something big like rent or utilities and stuff like that, and then they have to be paid on time every month. So they usually want at least three, and it's hard to get people that have that much. And also, it becomes tiresome on them because I need them to give me 12 months of bank statements. So you have to go scour through these 12 months, and then obviously now, if once you got a couple of the big ones, yeah, that's what you can use. Like maybe they've got a Netflix or whatever that comes out. But ideally, you want cell phone, utilities, rent, that type of stuff. And it's amazing the number of people that still pay cash for rent.
I was just going to ask you about that. What, to the new buyer that, is thinking maybe I'm trying to position myself to buy a home, maybe through Main State Housing or another program. To that person, what is your advice? What's the best way to document that rent, especially if maybe your landlord is not responsive to tell a lender that yes, they rented for 2 years, they paid their rent, timely and all of that. What can they do to protect themselves and prepare themselves for when you ask them that question?
Yeah, I mean, if they're moving forward, I mean, because now you got your PayPal's, your Venmos, something like that, and then you can put like the note on it's for rent. At least you have something, because but again, like it's just amazing that people still want to use cash because there's no protection. Who's this? How are you protected to say that you actually paid them? But by using like some sort of automated app, at least it's going to document that yes, this was paid, this person received it. Then you can still show that it came out of your bank account.
So it
Um,
can be as simple as a Venmo, a PayPal, and always
yeah,
have that memo, January 2025 rent.
yeah.
Okay, so really, as much as you can, get things into your name, document it, be smart about it. What are some other alternate lines that people may not think about that they could use?
Uh, really, I mean that's I mean you can use the small stuff, your different apps, food services, basically anything that's recurring that we can look at that shows, on the 5th, this comes out every month or whatever. Uh, However, those are more the small stuff's more stuff to support it. Um, if all we have for trade lines are, apps, Planet Fitness or all small stuff, it's most likely not going to help you out. You really need to have those big items that you can, shows more responsibility.
So that might be able to kind of put you over the hump, but you can't rely solely on those
No.
alternate lines. So another misconception, it's called the Maine State Housing Program. What if somebody is moving from another state to Maine? Are they still eligible for the program?
Yes, which I had somebody, a realtor actually asked me, like, oh, I didn't realize that, yeah, it doesn't matter. You can move from a different state. It's open to everybody. They don't discriminate. It's not like you have to be in Maine for 6 months before you can qualify for it. I've done many of them where they've come from other states.
You mentioned realtors. You must have to do a lot of outreach with realtors. What's your best way to educate realtors or anything that, I have a lot of realtors that listen to the podcast. What is the best way to educate them? And do you really encourage them to get to know this program really well so that they can help their buyers to possibly qualify?
Yeah, I mean, it's sometimes it's an uphill battle because they've been told for so long that it's not you shouldn't, it's a bad program or whatever. Um, and it really isn't. It doesn't make money, So like the reason why it's affordable and helps out to the clients is basically anybody that's doing mainstream housing basically is doing it as a service to the citizens or new citizens of Maine, because as a company you don't make money. It's just kind of it's a way to give back, really. So with the realtors, it's just trying to let them know that no, we like at least for us. We actually underwrite ours right in house, whereas some have to have them getting written by Mason Housing. Ours are fully written in house. There's really nothing different that's going to affect the loan or scare people off, and actually our pre-approvals are going to say whatever loan program it's attached to. It's going to say FHA, it's going to say USDA, VA. So if anything, it's just lumped in like a lot of times people always love either cash or conventional because then they get concerned when it comes to other loan programs just because they're more strict on their appraisals. Uh, but with Mesa Housing, it doesn't require any additional inspections.
So, I was going to ask you about appraisals. How much how much more strict is an appraisal for a Maine State housing loan as opposed to conventional?
None. So it's Mainstay Housing is gonna follow whatever guidelines it's paired with. So if it's chipped paint, that's gonna be an issue. Then even health and safety standards. If it's missing handrails, even a conventional is gonna require that. Cracked windows, all that type of stuff. So it doesn't make it any more difficult. And actually, um, it actually helps out to maybe make you a stronger offer because maybe now because where they're saving money, they're not and they're getting the 5 grand grant money, they don't have to ask for as much seller concession. So it might be a situation, it might help them out. So especially I had like one do a VA a program where they're looking at a conventional house up in Medford and had to go conventional because the house it was just the wiring and different things that need to go conventional. And then instead they ended up going VA, the Salute Maine program, buying a house in Dexter for 30 grand more. Um, and they brought $1,600 to closing versus the 16,000 that they were going to bring to close for a house that was $30,000 uh, less. And their rate was like two and a half, 2.5, 3 points lower.
That's such a good point. I hope any realtor listening will like rewind and listen to that all over again because you just gave a lot of really great information that as many years as I've been in this business, not a realtor, but I've been in this business for a long time, I didn't think about it that way. So that's a really great perspective. And I want to say good on you and good on Total Mortgage because when I see you out at affiliate events and the trade shows and those sort of things, you have a full display of Maine State housing information, and that's really what you're pushing. So I didn't really realize the aspect that it's not a moneymaker for your company.
Yeah, it's not like I said, it's just like I said, it's a service we provide. So it's just it's a long-term game. You help out that you maybe you don't make don't make a lot of money on your first one, but you treat them right, and then they come back or they refer their friends. So it's better to do the long game because I'm in this for the long haul, and it works out much better. And then the other thing that really I think a lot of realtors don't realize is the multi-unit program. So with a multi-unit, up to 4 units. So instead of 5 grand, you get 8 grand on a 2 unit, 11 grand on a 3 unit, and 14,000 on a 4 unit. So now you're really changing the aspect of, with all these funds, you can really make your offer, and you don't have to, you really shouldn't have to ask for seller concessions. Because sometimes someone's buying a 4 unit, they're going to ask for, well, I need 10 grand. And then with them going, the Main State Housing multi-unit, they're going to get 14 grand. And they're not paying the points. So, I mean, they could, say they're going to, pay, maybe 2 or 3 grand in points. Now, they're over, close to 18,000, maybe $20,000 of saving, by being able to do that. And the only additional requirement, with the multi-unit is you have to take a landlord class. So again, so that's why, when people first come in, figure out what they're looking for, try to get them on that. just so that you can get those classes out of the way. Because I did one with my nephew, bought a 2 unit, self-employed borrower, and again we were able to um, also begin because we were able to underwrite stuff. Um, like the DTIs are they're hard, but they're not as hard as people think. Because the people that aren't maybe don't do a lot of maintenance housing don't realize that, they might look at it, oh, it's, you know, a 31 front end, I can't go over that. Um, and especially if they're like a 680 or more, we can get a waiver. There's just other, it's kind of almost like a manual underwrite on some of the stuff, but we can go higher. So you can, it doesn't matter if you're self-employed. We can go through, and we can still get you in there. That's one of the other big advantages of the program. Like I said, we really can do a lot.
And just because I'm sure a lot of first-time home buyers that are really interested in Maine state housing, DTI is debt to income. That's what you look
Yeah,
at.
yeah.
Okay.
DTI is debt to income, and then I've said points many times. 1 point is 1% of the loan amount. So if it's $200,000 house, you're doing FHA, so now it's 7% is your down payment, so your loan amount is 193. So it'd be 1,930 would be your points if you were to pay 1 point. And again, it's the same thing like with interest rate. What's also one of the things I love about Mesa Housing, it's a fixed rate. So if somebody calls, they can't really rate shop, you know, other than like I know what I'm talking about and I can get you closed. Versus like I had a client tell me, well, I went to this is a bank or whatever, and they're like, yeah, I think you'd qualify for Mesa Housing. I don't really know anything about it, but I think you'd qualify. So like, how are you making these assumptions when you clearly don't know what you're talking about? Because again, there is a lot of small stuff that goes into it.
I think that's it. You have to be very well versed in the program to really be able to understand it, explain it to people, and not waste their time with a program that isn't going to be a fit for them, but also taking that deep dive and looking at every aspect to see if there's a way that it can be a fit.
Well, yeah, and also, and sometimes it's also taking a look at what the property is, because I can pre-approve somebody, and then all of a sudden they send me this thing. Well, it's a 10-acre lot. Like, well, no, you can't have more than 3 acres for Mason housing. That's just something small that's gonna probably get missed if you don't pay attention.
Can you give us a just a basic, as I'm sitting here listening to you talk and somebody that may not understand, the basic things that would be considered closing costs and things that would not be considered closing costs?
Yeah, so your closing costs are basically it's your closing costs and your prepaid items. So your closing costs are going to be, basically the actual cost of the loan. So it's going to be your origination fee, um, and then after that, everything, at least for us, everything's third party. So it's your appraisal fee, your transfer tax, your title fees, because obviously we require the lender's title fee, but we don't require the owner's title fee, which I always try to explain that to people. All the benefits of why you should have that.
Owner's
Because
title insurance. Yes, absolutely.
I had one a closing that was delayed about 3 months because, and ironically it was a realtor that bought tax acquired property and didn't get owner's title insurance, and then we ran into it when that person tried to sell it. But so those your major things are your title, your appraisal, that type of stuff. And then you have your prepaids, so that's going to be your taxes and insurance.
Your,
And so a lot
your,
of times people will look and see, why is it like $9,000? I'm like, well, no, your actual closing costs more like five. However, we have to build up your escrow.
that's actually a really good point, and I do that as well. I lump the lender fee, the origination. I lump that all in with appraisal and the third party, but they're closing costs, but there is a separation there between those items, correct?
Yeah.
you want to see them succeed. You're anyone that
Yeah,
has the idea that a loan officer is like, has that big denied stamp and they get any satisfaction from that. That's
yeah,
not what you're about.
yeah. No, no. We're about basically putting people in houses. The big denied stamp. That's your parking mate or your underwriter that sometimes get those labels as they just want to say no. No, but we want to get you into a home.
And one thing I just want to touch on is employment and employment history. So if somebody's looking to buy a house, again, a lot of times younger people, maybe just out of college, just starting, or maybe they're trying to find their fit. So they've had a few job changes. What do you do with that?
So job history again, it kind of depends on what program you're with, but for the most part, you want same line of work. So they FHA doesn't want any more than three job changes within 12 months. So you don't want somebody that's been bouncing around. That would run into an issue. So if that was an issue with FHA, it's also going to be an issue with Mason Housing. But far as like say somebody's starting out and they basically they have no work history. Say they went to Maine and they got their nursing degree, um, and then they just start. So they're technically look at, well, I've been employed for 1 month. Well, no, we're gonna get your transcripts. We're gonna use your schooling as job history. So that's what helps out there. And then also same time if it's say they've changed jobs, but it's same line of work or something similar, you can make it. So or sometimes we get the same thing. You go in the military, it's like how do you then say, well, I got this job here. I'm not in the military. That's a lot different. Like, well, what did you do? Well, I was a mechanic or I drove truck. Well, now you drive for Arch Foster or something.
Hmm.
There's things we can take it that way there. As long as it just has to pass a straight face test of, you can't say that I was an MP, in the army and now I'm a plumber. A little bit different.
Right, right. So if somebody has a teaching degree, and they've taught at maybe three different schools in 4 years, trying to find the right fit, that would probably look a little better than somebody that was a cashier, then a plumber, then a insurance agent, just kind of bouncing
Yeah,
around.
yeah. You don't want to have like the massive swings.
If you had a key takeaway for a real estate agent, what would that be?
I guess it might be don't just look negatively on Mesa. If you get an offer, it's Mesa Housing. I wouldn't necessarily look negatively on it. It's a great program. It really has a lot of benefits, and it also allows you, because they can maybe they can afford their commission or something, because now they have the money. They're gonna be saving funds, um, and where it's grant money versus gift money, it's because a lot of times if someone tells us that, their mother's going to give them a gift, so we go by what they verbally tell us. Well, with the grant, we know they're going to get that money.
That's actually a really good point because another sales point is all of the changes with the real estate agents and how they're paid now with this NAR settlement that went into effect this last August, I believe. It helps out again. It's such a challenge for buyers, young buyers, to buy property. And then if they're asked to pay that or they need to pay that buyer's commission, buyer's agent commission on top of that, Maine State Housing could help them with that as well.
Yeah. So and then again, where Mesa Housing follows the program is paired with, so you can ask for seller concession or seller credit. Um, Basically it's help with your closing costs. So the seller can pay your closing costs, but they can't pay your down payment. Then each program has a breakdown of what they're allowed to do.
So when it comes to a key takeaway for somebody that's like, I don't know, my uncle told me I wouldn't qualify, but my mom told me that I would qualify. I don't know why we all do this guessing game as opposed to reaching out to someone such as yourself.
Yeah, I mean sometimes it's ostrich bury your head in the sand. Just wait. Which I would never recommend because especially like I said where we can do the soft pull that doesn't impact your credit. You know that way there because like people can call and they can give all these scenarios. I'm like, oh yeah, it sounds great. And then all of a sudden we pull credit and we find out. well, you didn't tell me you had a bankruptcy, or you have these collections, or you have all these student loans, um, or or something, or it's like a situation where like you don't really have a lot of credit. And so by being able to speak to the person, get an actual application, and actually see what's on their credit, yes, maybe I can't qualify you today, but maybe we can get you qualified, in 3, 6 months, because, say we need to boost your credit by doing an authorized user, or you can even do like the Experian Boost stuff where you self-report like your insurance, rents and stuff like that. And those we automatically exclude on your DTI anyways. Because the only things that we're gonna worry about on liabilities are actual, like, credit cards, loans, that type of stuff. Even medical debt will get excluded.
So what I'm hearing from that is don't just assume, good, bad, or otherwise, that you will qualify or won't qualify, and things will be verified, but don't be embarrassed. Or maybe you did have something that happened 10 years ago. You had a car repossessed, or who knows, something that might have been a ding to your credit, or maybe something that you would be a little bit embarrassed about. You're not judgy. You don't care, right? I mean, you work with people all the time to
Oh yeah.
get them in a better financial place to be able to purchase that home. I guess I kind of want to wrap us up and just encourage and acknowledge to anybody listening that you and I have really, like, my head's spinning and I actually have a little bit of a clue with this stuff, but we've covered so much information. So listen to the episode again. I'm going to say that, or have a conversation, because we've thrown out probably every scenario, almost every scenario, that you can think of. So it really, at the end of the day, is everybody has their different situation financially, credit wise, employment wise, where they're at in life. So they really need to sit down with you and talk it through.
I think basically I guess kind of recapping on the Maine State housing is like, if you have at least a 640 and you make less than the 97.9 for family 1 to 2, that's your open window. And then what we didn't touch on, with the multi-unit, you can also get 75% of the rent to help you qualify, and it doesn't negatively affect you on your income limit. So basically for the regular Advantage, just the 640, and you have to have, under the 97.9. The multi-unit, same thing, except for we can add the rents to help you qualify.
So the
Um,
97.9, just to clarify, that's
Gross
family
income.
gross income combined for a
Yep.
family of
1 to 2.
1 to 2. Okay. And then it varies as you add, dependents and others
Yeah,
in the
yeah. So
family.
you up
Yep.
to 3, and it goes to 111, 835. Now, if you're in
Hmm.
Southern Maine, you can go up to like 127 in York and Cumberland, but
Oh,
it's
okay.
just those two counties. And then the VA, don't think that you can't do it because you have owned a house. You do not have to be a first-time home buyer, with the VA. And again, and you'll save on your interest rate. And then first gen, uh, you just have to be a first generation home buyer, and now you're going to actually get 10 grand.
That's amazing. I love that. I love that program. Let's give everybody your information. So they've been impressed with all the information you've given us here today, but they really want to sit down and talk with you about their specific situation. How can they reach you, Mark?
Yeah, so it's Mark Lloyd. I'm the branch manager of the Total Mortgage in Bangor. The phone number is 207-478-2065. That's my direct cell phone. Answer all the time. Sometimes text is easier. They also have the email, and that's just mlloyd@totalmortgage.com. So, both of those work well. But a phone call will definitely get you there.
Well, I appreciate you so much, Mark. We've worked together for years and years, and I'm glad we were able to put this together and just really give some great information on Maine State housing.
Alrighty, thank you.
This has been the Maine Real Estate Roundtable podcast with Bobbie Grenier. I hope you enjoyed today's discussion and will share this episode with a friend. And don't forget to leave a review and follow the podcast so you don't miss new episodes. The content of this podcast is for informational purposes and not intended as legal advice or representation by myself or any of the guests on the podcast. Thanks for listening, and until next time, keep it real.